Today's guest is Tammy Wagner with Homeowners Financial Group. And Tammy and I sit down and talk about home ownership as the American dream. That's right. And you see, when people are investing in buying a home, they're also investing in their neighborhood, getting involved in their community, and participating in the benefit of what's happening around them and their neighbors. Today we talk about a variety of things, current things like pandemic and COVID-19 and furlough, and how does it affect your credit score, and what you'll be able to do after COVID-19 in your house. Low interest rates, just tons and tons of great information that is pertinent right now if you're considering selling, buying, leasing, doing something with your home.
My name's Travis Sims, and I am the founder and CEO of AGC Accelerated Global Connections. And this is the AGC Experience.
Today's broadcast was brought to you by Beyond Design, where they work to provide businesses with affordable and individualized marketing through quality design and strategic implementation in online media promotions, print advertising, events, and public relations marketing. You can find Holly Brunette and her team at Beyond Design at graphicbeyonddesign.com. And note, anytime you see the AGC logo at one of our events on a sign, print, or social media post, you will know that Holly and her team at Beyond Design took great care of us.
All right, ladies and gentlemen, I am super excited to be here today with another amazing podcast just for you. I want to say thank you to our audience. I want to say thank you for listening. I want to say thank you for watching. I want to say thank you for sharing. We are now getting listeners and watchers from all over the country and all over the world, and it's because of you. That's right. You're not just listening, but you're saying, hey, this is some great content. I'm learning a lot, and you're sharing this out with everyone. So if you too want to share this podcast, just take the link and send it to someone that you love, someone that you care about, someone that you want to make a difference for in their life and in their business. And today I'm here with my friend Tammy Wagner with Homeowners Financial Group. And Tammy, you've been an AGC member from early on, and recently, well, maybe not that recently, but pretty recently, you joined our lieutenant team in St. Paul. You're a pretty active member. You're on a lot of our events, watching on live on social media. You are involved in our Zoom rooms and all the things that we're doing. And I just want to say, wow, what an awesome person, awesome member. And thank you so much for being our guest today. I'd love for you to please start with just sharing a little bit about you and yourself. We want to get to know you better.
Wonderful. Thank you, Travis. I'm honored to be part of this and appreciate your invite. So I am a mother, a wife, a daughter of an Army veteran, which I'm very proud of. A very giving and selfless mother. And I have a black lab, Mollie, that I adore. I love spending time with family and friends, which includes traveling, boating on the river, hiking. And I feel truly blessed to be able to do a career that I really enjoy. I really like bringing the American dream of homeownership to people, and really feel that it also builds communities and definitely builds wealth. So that's my blessing.
Awesome. So building community and helping others build wealth. Let's dig a little bit deeper into that. Love to know your thoughts on that. What do you mean by when you help them buy a home that you're building community and wealth?
So communities, it's just a fact that when you own a home, you tend to give more to it, tend to get to know your neighbors and talk. And I know I'm truly blessed that I have great neighbors that help me when I need them. So I see that easily coming into focus. People want to give more to something that they own, and that's going to become a value and leads into the wealth part of it. I recently had a gal that said, I just added up my rental payments for the last 6 years, and I have wasted $100,000. and what could she have done with that equity? Maybe she started off smaller and would have got to the home of her dreams, or maybe she was in a financial crisis, but that equity could have been slated clean, and she wouldn't have had all that burden, all that weight of wondering what she was going to do. And if selling it, if you sell the home, that equity you can take to buy a new home, or live very comfortably in retirement years, things like that.
Yeah. Oh, I love that. I love the idea of, because you've bought a home here, it's almost like you're putting some roots in place, and you care about your neighborhood and you want to be involved in your neighborhood. I really hadn't put that together until you just said it. The difference between renting is that I may not be here that long. I don't know how long I'll be here. It's just for the short term. But typically when you buy, it is for the long term. And I can think about, whenever I bought a home here in Minnesota, and I got here, and things were just starting to thaw, and I started to meet my neighbors for the first time. And I met the neighbors behind me first, and then off to the left, and then a little bit further around the cul-de-sac here. And I'm a social person. I'm the natural networker, as you know. And so I'm out meeting the neighbors. And then pretty soon we had a gathering at our home, and the people I'd met for the first time, my neighbors, I invited them, and they came. All of them came. And then come to find out, none of them knew each other. Can you believe? I know. Can you believe that? None of them knew each other. Some of them had lived literally next door, across the street from each other for years. I'm talking 10, 20, 30 years. And they would wave at each other, but they never took the time to get to know each other. And now all of our neighbors are friends, and we socialize. And so we helped just bring the neighborhood together.
Yeah, I've seen them bring you food before, I think. Yeah. Isn't that amazing? So not only are you the amazing network guru, but you're the network in the neighborhood as well.
I can't help it. I can't help it. And so I wonder, on this subject of planting roots and of, investing in your neighborhood and investing in your community, do you know any statistics, or from your own experience, how long does a person generally own their home? Like, is it the same as it was back centuries ago when you bought one home and you stayed there your entire life? What do the numbers today look like?
I heard of rumors that, it used to be like the 7 years. I personally feel that has stretched. We had the mortgage crisis in 08 and 10, where values were under. We've got this COVID going on now, and some financial distress there, especially in the market. So I don't know exactly what it is, but if I had to guess, there's some that do move in 4 years. I've seen some people, because of COVID, they're wanting a bigger house or more room or special features. But I think it's longer. I think it's more like 10 years. I could be wrong, but that's just my personal intake because of the economy in the last 12, 15 years.
Yeah, so that 7 to 10 year itch, people want to move or make changes in their lives. I can see that. And, I want to hit back onto that area where you talked about wealth, building your wealth and building in your equity. And, that's a form of a retirement plan as well, right? I mean, when I think of retirement plans, I tend to think of 401ks and Roth IRAs and financial advisors, but probably one of your most solid investments in your retirement is your home, because you're building all that wealth back into your home, and you're going to be able to pull that out and use it in some way later in life.
Exactly. Yeah, I see that a lot. I really, right now, as well as purchases, doing refinances quite a bit with the rates so low. And it's just so fun for me to say, in some cases, hey, you can save $100 a month, which maybe isn't a lot, but if I'm cutting the term, I can say there's an extra 50,000, an extra 100,000 without paying more out that you're going to be saving for retirement. So it's kind of a no-brainer.
Yeah, for sure. I'm someone that thinks like, all right, when I'm at this age, I'll have this much equity built in my home, and the house will be worth this value on the market. And I'm going to take that money and I'm going to go to Belize somewhere, and that's where I'm going to spend my retirement. So that's the way I think.
Yep, I agree. A few years ago, I had helped a couple. They sold their home here in Minnesota, retired in Arizona, and they were able to not only buy a house in Arizona with a very small mortgage, but they took their financial advisor actually said, don't pay off the home loan, get a mortgage, but take that extra $100,000 and invest it.
Yeah.
So they're living their dream, and they've got extra income and extra assets to do what they want to do.
That's awesome.
Yeah.
I'd love to get your thoughts and kind of branch off just a little bit. You know, we're living in some unusual times, and we're seeing things in the market that we've never seen before, including, I mean, majorly low interest rates that even I've never seen. And so I'm just kind of curious too, you know, what does it feel and look like in the market from your perspective, you know? And what I mean by that is, you know, are people going, okay, I need to sell and get out from under my debt and do something different? Are you seeing a lot of that? Are you seeing a lot of people that are digging in and doing refinances? You know, there's so much uncertainty, you know, right now. And so I think got a lot of people a little on edge on which direction do I go here?
Yeah, it's definitely a mixed bag. But for the most part, I am seeing people that are selling and upgrading for the room since they've been either homeschooling or working from home, but having very little change in their payment, and they're so excited. They're like, for an extra $100 more, I can have my house of my dreams and live there until I'm elderly and have to move out. Or so I'm seeing that. Some people from the cities have decided to go out further into the suburbs. That's happening too. And even, you know, for maybe the people that aren't, you know, having financial difficulties, even a few people are buying those lake homes because, again, with COVID, there was not a whole lot to do. So they're rethinking that. And that's been fun to see come back, is people buying those homes that they can spend more time with their family.
You know, whenever I got here to Minnesota, I'm not originally from Minnesota. I'm originally from Indiana. And when I got to Minnesota, everybody started talking about, oh, we're going to the cabin. You're going to cabin. And I was like, what is a cabin? How does everybody here have a cabin? You know, I've never heard of such a thing. In Indiana, that's not a thing. And I've now had the luxury of being invited to some of these cabins, and they're, I mean, second homes, you know, carrying that second mortgage. You know, do you have any advice for people that are you know, they're interested in that vacation home, or they're interested in that second mortgage or that second home? How do you leverage that on, you know, what your income is today?
You know, some of these, a lot of them are, you know, in the outskirts, up at the lake, up north, and you'll find that you'll get great rates just like you have on your first mortgage. The taxes tend to be a little bit less, so that helps. Okay. You know, with a second home, it is a requirement to have 10% down, so you've got to have that. And sometimes people use equity in their primary residence to get that. So there's a little bit more down, which will help with the payment. And then we find usually that the taxes and even insurance, home insurance, can be less, and they're able to do it. Yeah. Okay.
All right. Yeah, I'm personally more me. I'm like, let's just make this home so great that we don't want to leave it. You know, we don't need a secondary home to relax. We don't need a secondary home to go to because, you know, we've got all the things that we love and enjoy right here. And so that's my theory of not having that second mortgage, but I totally get relaxing that way. Yeah. So first of all, I want to say, you know, you mentioned early in your introduction that you're an Army veteran. That's something I didn't know about you.
Oh, not me, my dad.
Your dad. Okay, gotcha. All right.
So I'm very committed to, you know, as well as the community. I really have a strong heart for veterans and for people serving in the military and their families and what they have to go through. So I do try to be involved in veteran groups, donations, and just care packages, which will be coming up here in November for Veterans Day. So usually tag a more than a few, probably 5, 6, maybe it'll be 10 this year, daycares, and they draw pictures and they say thank you. And I just get tears in my eyes. It just means so much to me. So I know that they're giving up a lot, and I know that their families are giving up a lot.
Yeah.
That's just, I was born when my dad was in the Army. So I definitely love to mention that he was there, and the respect that I have, and do give back that way too.
Oh, that's awesome. No, that's absolutely great. We can't thank our veterans enough. My dad was a veteran. My grandpa on my mom's side, I got aunts and uncles. My brother, my son, I'm the only one. I didn't take that leap, but I found ways to serve locally, and so, but love our veterans and the programs that are available to them. I'm sure you're very well versed in able to help them secure and get the most out of what they have available in those programs.
Yes, yep. VA loans, and my groups kind of advocate for education on home ownership, taking care of your finances, how to do that. So it's and then helping them when they're in need. So I really do value that.
Well, being in this worldwide pandemic, and we're now working on almost 6 months of this, and I just have to ask too, with us in this position, and not everyone is an essential worker, okay? Which means there are tons of Americans that are struggling right now to even pay their mortgage. And so I'm curious I know of a lot of people that have needed to furlough their mortgages, needed to postpone their payments in some way, in some program that they have. And I'm just would like to know from an expert, someone that deals with mortgages every day, if you're in that position, is that a good move? Is that a bad move? Like, do you need to look at something else? Like, should you sell before you furlough? What do you really do if you're in that position?
Well, first of all, it's ever changing. New rules, new guidelines, but at this time, we do have to take into consideration, it doesn't hit their credit, so it doesn't lower their credit score. But we do have to take into consideration that they've had this hardship. So if you're able to make it, I do encourage that. With certain conditions, I've had to tell a client that we have to wait 3 months of regular payments because they want to make sure that they're steady. Most loans are backed up by the government. It's Fannie Mae, Freddie Mac, FHA, VA, rural development. And so they're worried about losses, and they're worried about, very strongly worried about foreclosures, losses, things like that. So they are very cautious. A lot of things, we came out strong with, many rules and guidelines. Mortgage companies did overlays sometimes on top of those to prevent their own losses. If you can make it, I would encourage you to do it. Don't just take the easy street out, because at this very time, it will affect you. A year down the road, 2 years, I don't think it will, but I have no idea.
Sure.
It's changing constantly. So, but it is not affecting the credit. Your score is not lowering, and it just may prevent you from purchasing or buying in the near future.
Yeah. And speaking of that, buying in the future, if you have someone that's listening or watching, this podcast right now, and they go, you know what, I could stand to, improve the size of my home a bit and have the similar payment and some of those things you described earlier. And if that's the case, is it any more difficult today to get a home loan than it previously was to the pandemic? So, for example, like I know interest rates are way lower, but is it harder to qualify for a home loan today? Like, do you have to prove more proof where your income's coming from than what you did, or has any of those type of things changed?
Yeah, it's going to vary from company to company. They may have higher minimum scores in the government states, or some are not doing cash out refinances. So that home improvement that you talked about, some financial institutions are not doing that. It also could be to curb the volume of loans coming in, because we are working really hard. Everybody, closers, title, insurance, processors, loan officers, we're all working long hours right now to try to keep up with the volume. So it could be a little bit of that as well. As far as the loan itself, really there's a couple extra things like pay stubs. You know, it used to be in the beginning we would get the pay stub and it wasn't a question. Well, now that pay date before closing is required to show that you're still working because of the uncertainty of things shutting down, you know, that kind of thing. And they want to make sure that you can afford what you're doing. So pay stubs is one. They check inquiries, you know, to make sure no new debt was obtained before we close the mortgage. But otherwise, for the most part, it's pretty much the same. Nothing so difficult. Yeah.
Okay. And for someone to qualify for a home loan today, you know, what's the average credit score they need?
Depends on the loan program. Typically, you know, 580. Veteran loans necessarily don't have a minimum interest rate, although lenders will put a interest rate on that sometimes, a minimum. If you're getting down payment assistance, which is something I really like to help people do to help get into a home, then most programs are 640, 650. There'll be a few that don't have any, but the primary ones in Minnesota that cover the whole state, like a 640 or 650, again, depending on the loan program. Sure. And that actually is the one, a big reason that I am with homeowners. I found in other financial institutions I was unable to, when somebody didn't have a credit score, I had to say, work on it, come back in 4 months, we'll see if it's better. And that really discouraged me. So where I'm at now with homeowners, we've got the tools to help people with their credit. And sometimes that's immediate. And sometimes it's a month or two. And I just closed down with somebody that we worked on him for 11 months, but he bought a home. So it was a process. Of course, buying that motorcycle in between those months didn't help at all. But he said, "This is too good of a deal. I couldn't pass it up." Well, but I value that, and I really respect when people give that attention and that drive to make it to buying a home, and I like to be a part of that. I love.
Oh, that's awesome.
There, yeah, I want to give them direction. Credit's a monster. I mean, for the most part, unless you've had everything perfect your whole life, it's really hard to figure out. And just being able to give the direction and a timeline to people, I think, means a lot.
Yeah, it is definitely, a formula that people are trying to crack, and it's I want that motorcycle or I want that car, but I'm trying to buy a home. I remember whenever I was selling a home, buying a home, and just like watching everything, like I can't move anything out of my bank account. Like it's got to stay intact for at least these 3 months. And I just was scared to make any kind of move. So totally can relate to that.
Yeah. It varies. Some people are really strict like you, and and other ones, remember somebody buying, a Range Rover for $1,000 payment that kind of killed that he was self-employed. So yeah, it varies between different customers, but that gets down to communication. I really believe in letting, putting things on the table right away and making recommendations. If you are going to buy that washer and dryer, just check with me. It may be perfectly fine. It may not affect your debt to income, no issues. But if it affects them where it's going to hurt them financially, because I'm unable to get them in that home or refinance them, I would rather them know up front. Might be a couple trips to the laundromat or using mom or dad's, laundry service, something like that. But I usually just tell people to check in with me before they make the big purchase, just so I can confirm it.
Sure.
Yeah.
So I want to ask this too, and that is, like, if you had a crystal ball and you could predict the future of what's going to come in 2021 for the housing market, would you say it's going to be similar to what it is now, or would you predict that it's going to be more difficult because of foreclosures and those kind of things? Will we see it sway that much? What do you think there will be some government bailouts for homeowners? What do you do you have any ideas, thoughts of your own? And I know no one can predict the future, but I'd love to hear just what your thoughts are.
If I could predict it, I'd be owning an island somewhere. But a lot of the rate stuff is a gamble. Some of the smallest things, the news, we're getting a what they call a shot or whatever, the vaccine for the COVID, and then sometimes that can spike it. So it's really based on the market. So it's a tough thing to really decide on or put a guess on. But I was a little bit more than to the last month. I really expected the lower rates to stay through 2021 or most of it. There might be some indications that that it won't happen, that they'll go up a little. I don't think they're going to skyrocket, but we might see the 3-4 range, I think, in 2021. Again, it's only speculation, but I think they'll come up a little bit. I think the housing market's going to stay strong. I think we'll be okay. There's a lot of people getting rental assistance. I haven't seen the foreclosures spike. I think with assistance and the way the government is helping out, I think we're going to be good. The rates just might go up a little bit.
It does have, I'll say, a really different feel than what it did back in 2007 and 8 when all that was happening. I remember being and living through that time and watching that happen, and there was so many people in foreclosures and bankruptcies, and there was no help for the small person. There were bailouts for car companies and manufacturing and all the big things, but there wasn't any bailouts for the small business owners and for the homeowners and things. And it feels like, at least with this pandemic, that they have made some options available, for small business owners, for those homeowners, those renters, the people that have never had that kind of bailout before.
Yeah, I strongly agree. Those years were probably one of the worst of my life personally, financially. My husband was in new home construction, and people used to say, "Oh, I bet she gets laid off all the time," and never. Like the week between Christmas and New Year's might be the only slowdown. But it was a very, I wasn't homeless, but there was times where I wondered where I was going to go. And I don't regret going through those times. I really, especially being in customer service, I feel like I understand people better and I understand their situations. But you're right. I definitely feel that it's a lot different, and we'll make it through this a lot better. I agree.
That's really good to know. I mean, it actually, to know that about you, I'm sure does make it a little bit more relatable to your clients that you work with. You're able to understand and identify with, where they're at in this moment, whatever that might be. Having someone that may have been through some of those things and had those experiences, it develops a better understanding, probably allows you to relate to your customers better.
Yeah, and that's why I don't regret it at all. It was a learning lesson. It was much different than experienced before. But I'm glad that I went through it. And, one of my things is when people do say, during this time I had to foreclose or I had to bankruptcy, I could tell them there's a lot of people in your shoes. So don't blame yourself. Don't be so hard on yourself, because there's a lot of people in the same shoes.
Yeah. I think too, that people to understand that there's room for second chances, and there's opportunities to rebuild, to restart, to regrow from wherever you're at, and whatever circumstance that is in. We were on a Zoom meeting yesterday together, and for AGC, that is, and I shared one of my favorite quotes that I had written, and I love this quote, and it's because I was going through this big struggle at the time, and I came up with this quote, and it says, on the other side of your current struggle is your next victory. And if we can embrace that type of ideology, that thinking, that whatever struggle we're in, there is something on the other side of it. Our victory's just ahead of us, and we just got to get through that, and we'll come out stronger on the other side.
I love that. That's great.
Well, that's awesome to have you on today and share your expertise with us. And so I'm on the podcast today with Tammy Wagner, and Tammy is with the Homeowners Financial Group. And Tammy, I'm assuming, I don't know how mortgage works exactly. Is it, if someone's interested in getting in touch with you about having you handle their mortgage needs, is that inside the state of Minnesota? Can you do a mortgage anywhere? I know some realtors can have to be licensed in different places, but I'm not familiar with mortgage.
Yeah. Typically, you have to be licensed in the state.
Okay.
But I have affiliations within the company that I
Okay.
can still work with you, but get your loan done. So I'd like to be that contact. It's just a passion of mine to help people, and I feel like being able to serve locally. So even if it's not Minnesota, I will be this year getting licensed before the year's over in Wisconsin as well. I can still play a part and assist you, whether it's meeting you to sign documents or picking up items, explaining things. I can still be that person. I just have the licensed person behind me.
Okay, that's awesome to know. So if you're in Minnesota, it's a no-brainer. You're going to call Tammy. She's an AGC member. She's an AGC lieutenant. She's just a rock star of a person that can identify with you and what you're going through and kind of handhold you through this. And if you're outside of Minnesota, but you still want that personal touch and somebody that will understand and listen, you're going to get in touch with Tammy. How can we find you, Tammy?
Homeowners FG stands for Financial Group.com/Tammy Wagner. I also connect with a lot of people on Facebook as well, and that's just Tammy Wagner.
Awesome. I'm going to spell your last name too, just so, because sometimes that name is spelled a couple different ways. It's Wagner, Wagner. Okay. Awesome. Well, I'd like to say thank you so much for being a guest today on the AGC Experience Podcast Show. A pleasure to sit down with you and really just understand your industry a little bit better, and especially during these current times, because it's I'm sure this conversation would have been way different if it had been done a year ago, but today it's very relevant, it's very necessary, and I'm glad I got the chance to sit down with you.
Thank you. I really appreciate it. Nice talking with you.
Awesome. And for our audience that's listening, thank you so much for staying with us this far. You got all the way to the end of this podcast. Now, your next step is to take this podcast and share it with the person that you know that's considering buying a home or refinancing a home, because all the knowledge that's within this podcast and the things that we've been able to share may help them in some way in whatever their path might be. And if they're looking for an expert, we have one on the podcast show today. So share it with someone you love, share it with someone that you could impact and help. And guys, thanks so much for supporting the AGC podcast show, The Experience. And also hit that subscribe button. If you haven't done it yet, hit the subscribe button, because every single Monday we're bringing you great experts, great content, and we want to love and keep you in our audience. So thanks again for listening. Thanks for watching.